Hi friends, what do you think is in this picture? A bamboo stem? Think bigger. This is roughly what the first oil rig looked like. Like many key discoveries, the extraction of black gold happened by accident. In the 4th century, the inhabitants of China made wells in the ground to get water, but instead they found a black substance that was not drinkable at all. However, it was used in weapons and lighting devices of that time. No one could have imagined that many centuries later, oil would become the lifeblood of global industry and China would become one of its biggest consumers. Strifor is with you, and in today's video, we will tell you how our world has become dependent on oil, how it affects the economies of individual countries, and how countries influence its pricing, what grades of oil there are, and why oil from different regions serves different purposes. And at the end, you will see the most important thing, how ordinary people, not countries and state corporations, but ordinary people make money on oil. And before you start watching, we recommend you to subscribe to our channel and turn on notifications so that you don't miss other interesting reviews. Oil is the backbone of the modern economy. It is primarily used as a fuel, but petroleum products are also used in plastics, paints, fabrics, fertilizers, medicines, and many other products. In 2024, the world will consume about 90 million barrels of oil every day. That's more than 14 billion liters. Today, oil is produced in more than 100 countries around the world, with the largest producers, Saudi Arabia, Russia, the United States, and Iran, accounting for 40%. According to the International Energy Agency, there are about 70,000 oil fields in the world, of which the largest 110 fields account for about half of global production. It is important to realize that oil grades differ in chemical composition and density. For example, heavy oil is suitable for power plants and heavy industry. Light oil is suitable for transportation and especially aviation fuels. According to scientists Ivan and Rafael Sandrea, 29% of proven reserves are light oil, 57% are medium, and 14% are heavy. The composition of oil depends directly on the region where it is extracted. We will also tell you about the key oil grades, the prices for which are determined on international exchanges, and set the benchmark for the pricing of other grades. Brent is a light, low-sulfur crude oil produced in the North Sea in Europe. 70% of the world's oil supply is pegged to Brent. Interestingly, the reserves of the field from which Brent gets its name are already depleted, but we will come back to that a little later. WTI, or light sweet crude oil, is produced in the state of Texas in the United States. It is a light, low-sulfur crude oil that is good for making gasoline and other distillates. Dubai crude is a medium-sulfur crude oil produced in Dubai, UAE. For a long time, it was the only brand from the Middle East that was freely traded, but now Oman crude is quoted alongside it. We have talked about how the original Brent field is already depleted. In addition, most of the world's top 20 production locations have been in operation for decades, and 16 of them have already passed their peak. And that brings us to a global problem. Oil, the main fuel of the world economy, is an inexhaustible resource. According to analysts, people have extracted half of all the oil contained in the earth, and if the current level of consumption is maintained, its reserves will be enough for about 50 years. That's why alternative sources of renewable energy are now being developed so actively, about which we will also release a video soon. Don't forget to subscribe to our channel so you don't miss out. However, oil is certainly not going anywhere in the coming decades, and it is actively used not only by consumers of oil products, but also by traders and investors. Oil is one of the most popular assets on the financial markets. It began to be traded on exchanges in the 80s, attracting the interest of both short-term and long-term investors. The average volatility of oil quotes is about 3 times higher than that of currency pairs and gold. And possible price fluctuations during one day can reach an average of $2 to $10 per barrel. Such changes are explained by the high sensitivity of oil to economic, political, and technical factors. Traders trading oil assets should study the following news especially carefully. Political situation in producing countries. Military and economic conflicts can reduce supply. For example, politics often affects production in countries in Africa and the Middle East. In addition, sanctions are imposed against many oil-producing countries, among them Iran, Russia, and Venezuela. Natural disasters. For example, in 2005, Hurricane Katrina paralyzed production platforms in the Gulf of Mexico. Production in the region dropped by 92%. As a result, the price of WTI oil exceeded $70 per barrel for the first time in history. Also, the cost of oil is influenced by seasonal phenomena, changes in oil reserves in the storages of states, the dynamics of production in the US, changes in the growth rate of the global economy, the OPEC policy. This organization is a regulator of oil flows and can, for example, reduce the production quota, which will lead to a decrease in supply in the market and an increase in oil prices. Therefore, carefully follow the news if you decide to trade oil assets. Analyze the movement of quotations and competently assess the risks before making deals. Volatile markets, such as oil, allow you to earn a lot as well as to lose a lot. In any case, Strifor Broker wishes you success in this and other financial markets. For our part, we try to provide our clients with the most comfortable trading conditions. These are fast servers, which are especially important for dynamic assets. These are promotions and bonuses which allow you to receive active income on top of earnings from trades. And of course, it is security. Strifor is a member of the Financial Commission, the compensation fund of which is €20,000. Trade oil and other assets with us. There are 250 trading instruments to choose from, so everyone can find the right set for their trading strategy. Register an account using the QR code or the link in the description. And remember, Strifor always pays.